Taiwan is opening with cuts of, around 0.4%.
Logistics policy launched by Prime Minister Narendra Modi intends to bring down the cost of logistics from the current 12 to 13% to single digits.
I think the key for that is on the Bank Nifty, because that's been a very strong index. Even in the downside, as you saw on Friday, it was down 1%, but the Nifty was down 2%. So it's still trading between the 5 and 10-day exponential moving average.
Stocks looked expensive on trailing earnings, but not when you had moved forward in time.
The Nifty is up about 9 points.
If you look at the India, you cannot not but be bullish. It's an awesome looking market out here.
The street has taken this Ambuja Cement's preferential warrant issue very, very positively. Remember, they're going to be issuing warrants to the tune of close on 20,000 crore rupees on full conversion to the promoter entity. That's to the Adani Group.
It's added on close to more than 100 points, in fact, on the Nifty.
India will be at 25 to 30 trillion dollar economy by 2050.
This particular group is looking to diversify into an unrelated business category and has gone ahead and submitted a letter of intent to the lenders of McLeod Russell.
Everybody is trying to find macro backdrop for this outperformance.
The mid-cap index is really flitting between red and green, so the mid-cap index is now down around 0.2%.
Good afternoon and welcome to Closing Bell. I'm Anuj, with me Prashant and Nigel, and we've had a very volatile session today. It's tough to sort of point out one decisive trend because the market's shown you so much through the day. I mean, most of the volatility played out in the first hour itself. After that, the market remained steady through the day. Now there's some more volatility which is seeping in, especially in the broader market, where the advanced decline is once again in favor of declines and the mid-cap index is slipping into the red. There are, of course, pockets like cement, which continues to do well. Some of the NBFCs like Max, Bajaj Finance, they continue to do well. Autos continue to do well. But there are others on the downside as well. A couple of metal names, couple of pharma names. Overall, nothing kind of day as far as the broader market is concerned, though the Nifty is still holding with 80 points gain. Let's see what the last hour brings for us. Guys, good afternoon.
Anuj, hi. Nigel, hi. I mean, is it possible, and this is a question that I was just a thought I put to Atul Suri earlier as well, that, the market here completely misses the downside and then participates in the upside whenever that starts to happen in the US. I mean, is it possible? However long it takes, it's never happened before, but, well, there's always, a first time. However unlikely that scenario is, one has to consider it. One must consider it given the fact that the impulse is to buy the dip, and that's been very, very strong. As we start another week, just remember, on all time frames, the market is sitting right on top as far as a large market goes. We're at the #1 position in terms of returns. Dollar returns maybe for the year slightly lower, but even then, I mean, it would be at the pole position, just the sheer outperformance compared to other markets that we've had. Lots going on beneath the surface as far as the market today goes. I mean, there is cement, there is, there are these footwear stocks, there is so much else which we will talk about and discuss over the next 60 minutes. Nigel, hi.
Well, good afternoon, gentlemen. What stands out today is the underperformance we're seeing from the mid-cap space. The mid-cap index is more or less flattish, while higher number of stocks are declining in comparison to the number of stocks that are advancing. Though the mid-cap space, there are plenty of stocks that are moving in one direction. That's northward. But plenty to talk about. First up, let's run you through what we have lined up on the show for you. Escorts Kubota hits fresh 52-week high today. We'll get you key takeaways from the chat that we had with the management earlier today, a word on the expectations from the amalgamated JV, and the road ahead for business. Mahindra Mahindra gains on its plans to sell 30% in renewables arm. That's Mahindra Sustain to Ontario teachers, with a plan to offload another 9.99% by May next year. The move will aid the group's green energy push and value creation. Those details are lined up on the show. And stocks like Bajaj Finance and Schaeffler India, they are buzzing in trade on the back of brokerage notes. Details lined up as well. And finally, a word on the markets, the way forward, with Ravi Dharamshi, CIO at ValueQuest Investment Advisors. That's coming up in just a bit.
But as always, we start the show with last hour calls. Mitesh Thakkar joins us for that. Mitesh, hi, good afternoon. Been a very volatile sort of day. Your thoughts on how trade has panned out, especially considering that it's the Bank Nifty which is underperformed today, actually. And what would be your stock calls?
Anuj, see, I think, for me on the Nifty, technically, good afternoon, the important part was 17,500 kind of holding out. We, did oscillate below that, but that level has broadly held on. And I think, that's the key observation, that we are not breaking below that level. Now, having said that, I think the structure still remains weak on the intraday indicator basis. So I think, this bounce back which is happening, this pullback which is happening, will see a lot of supply at higher levels. I think the best I can give this is possibly, to my understanding, is about 17,800, 850. Today, I think it's difficult for me to believe that it will go beyond that in a day or two. So I think pullbacks closer to about 17,800, 17,750 would be my selling zone, where I can either sell Nifty futures directly or even buy into put options, or even sell out of money call options, because we are not, we are now only about 2 weeks away from expiry. Having said that, I think the Bank Nifty, while today is, slightly on the underperforming side, the important level for Bank Nifty is around 40,600, 550, which was the Friday's low. If that gets broken, then I think you will see the Bank Nifty possibly give up a good part of the gains which it did in the last 2-3 weeks, and therefore both the indices consecutively therefore would be under pressure. So I think on the index, either sell now, either sell below 17,500 on a break below that, or sell closer to about 17,750 on the Nifty, and on the Bank Nifty sell only below 40,600, 550. And I think both of these are a high probability event that eventually will break on the downside and see that some extension to this volatile and correction movement. Having said that, on the stock side, I have one buy and one sell. Maruti is something which is on the verge of breaking into fresh highs. So it's a conditional buy about 93.50. It is slightly tapered up, but I think it was around those 93.20 levels few minutes back. So about 93.50 buy with a stop below 92.70 for targets of 9,500. And IEX is breaking down after a few days of sideways consolidation. That's a sell with a stop at about 157 for targets of 145.
Okay, all right. So eventually headed lower. I mean, either you act on it now or maybe a little higher is basically what Mitesh is saying on the index, and of course those individual trades as well. Deepak Shenoy is founder of Capital Mind, is joining us now to take some questions. Deepak, Friday was pretty sharp, right? I mean, pretty sharp and swift on the way down, but today back up 100 points on the index. So that was the question. It was just a thought actually, whether the market can completely ignore global markets going down, and then when everything becomes a little okay, participate in the upside as well. I mean, what should not hurt should not help as well, but maybe it does. Your thoughts?
Yes, I mean, Prashant, to be fair, we've actually outperformed quite a bit on the in the current year. So 2022 itself, we are up, I think, or we were up till Wednesday of last week. So I don't know what it is as of Friday, but the US was down some 20% for the year. So there is a relative difference. And part of that might be bridged by a few days like Friday, where you have a minus 2%. Excuse me. But on the long term, I think, our fundamentals are much better. Our inflation is relatively under more control. In 2 or 3 months, we might see much lower numbers because we had a spike last year. So the base effect comes in. We also have much lower impact of wages and demand actually eating into our inflation compared to food and fuel. And that the food and fuel part is also moderating fast. So I think macro-wise, India is doing better. The stock markets, of course, are driven by liquidity. So if there is a big crisis in the West that drives away liquidity, and we'll know, that in the next rest of the year, then India is going to definitely be affected. So I think while our fundamentals are good, we are still going to be slaves of liquidity when it comes to our stock market. So have to, keep a close watch on liquidity more than we are on fundamentals right now.
Okay, all right. Hi, Deepak. Afternoon. I wanted your view on the QSR space. I just put out a note on, Yum Brands franchise, those two companies, as Devyani as well as Sapphire. There was a valuation gap. Some part of that is already done in terms of a catch-up. But your view on the theme, that is on the QSR theme, would you stick to, say, the Jubilant FoodWorks, and the likes, or would you look at a couple of these companies? And if any view on Sapphire versus Devyani?
So I think Sapphire, Devyani and Westlife are probably, more interesting candidates than Jubilant, but Jubilant is a better managed company, at least from the looks of it overall. Of all of them, we like Devyani the most, though honestly, I haven't got any investments in this space. So when I say like, I just mean like I want to invest in them. But the space is really tiny right now in terms of market cap in comparison with much of the rest. There is a growing long term. I think India will continue to demand or create accept the demand of QSR, specifically these brands, and whether it's McDonald's or KFC or Domino's. In all probability, these will scale to much higher levels in terms of revenue. The problem really is valuation, and I feel that the valuation of some of these players, including Jubilant, is probably on the higher side and therefore does not give too much room. So if the valuations were to come down to more meaningful levels, barring Westlife, which I think is relatively small, so I think we might participate better in them. I think the space is great. It's not very healthy. It'll possibly, if you're buying them, also buy some of the hospital and pharma names for the long term, because whoever eats more of this is going to end up with that. But I do think, from an investor's perspective, speaking without the morality factor in mind, these actually have great long-term stories.
Okay. Well, just Canpin Homes, of course, is the other stock which is in focus. There's been a lot of buzz about that stock. It's down about 7% right now, most of which has come in the last hour of trade. Deepak, hi, good afternoon. Any thoughts on Canpin Homes?
It's strange, Anuj. I haven't seen the fall. I don't know if anything fundamental has changed. It's a very simple story, Canpin. It's salaried employees that buy homes. More than 90% is salaried. They have very little builder exposure. Fairly well managed, and conservative in terms of accounting. But beyond that, the growth wasn't very visible here. We're looking at even overall banking space. The number of priority sector loans to housing has actually been dropping versus non-priority sector has been rising at 20% plus. So a bit of a slowdown in the space at the moment. So not keen on investing here, but we'll see. Maybe something fundamental has changed here. I haven't seen the news for the current fall here.
Okay, sorry. Let's just move on. Escorts Kubota is a stock that's in focus. It's hit a fresh all-time high as well. Now, keep in mind, after the open offer is over, it's a stock where the float is very limited. Between promoters and institutions, you add up and a couple of HNI investors, it adds up to around 92% or thereabout. This morning, of course, we had the management. Sonia is here with the key takeaways. Sonia?
So, Anuj, if you remember, a couple of days ago, Escorts announced that they will be amalgamating their JVs in order to come out with a simpler, cleaner organizational structure. Everything will now be under one umbrella. Now, we spoke to the management today, and there are many positives that came out from it. Now, these JVs which they're combining are currently loss-making, but they said that these JVs will become profitable by FY24 itself. So, clear timeline was given for profitability. Not just that, they also mentioned how the big trigger for the company here on will be localization of engine production, which they have kicked off, and this will take place over the next 2 years. Now, what this will do is bring down their costs drastically. They are expecting a 20 to 30% fall in costs over the next 2 years, and that's something that the street is factoring in. When asked about the overall business, they said that the months of September and October are expected to be blockbuster in terms of industry demand. And now that Kubota's stake has gone up to now about 53.1% now, Kubota is bringing a lot to the table in terms of better exports, better geographical reach for Escorts, and the Escorts Kubota JV will profit from that, and hence the stock has moved up post the positive commentary from the management, sitting at a fresh 52-week high as we speak.
Okay, well, actually, M&M is the other stock which is up quite a bit. Sonia, why don't you tell us about that as well?
So, there was some news flow in the morning, right, where the Mahindra Group has decided to now sell 30% of their stake in the renewable energy business, and they will be creating an InvIT eventually, where they will pump in the money into that InvIT and then go and list those assets in the renewable energy business. Now, the management in 2020 had said that they are looking to, unlock value for shareholders in multiple subsidiaries, if monetize assets over there. And this is one of their steps to clean their legacy businesses as well as focus on their core business. So this is, of course, one reason. But the other thing is CLSE came out with a note this morning where they have a very aggressive target price of 1,567. They have a buy. They say that M&M is now going through a golden period. They have multiple new launches in the SUV space. Their market share has gone up as well. It now stands at 16% in the overall utility vehicle space. In just the last 6 months, because of some big bang launches, the market share has risen from 14 to 16%. And they have very strong bookings of over 240,000 units for new SUVs. And they have multiple new SUVs planned over the next 12 months. In fact, we had a chance to speak to Ramdev Agarwal of Motilal Oswal, and he said that the big positive about M&M is that they're cleaning up all of their legacy businesses. So let's listen into what he had to say.
The company is very in a determined way that they are cleaning up all the portfolios of the legacy businesses and building up on the EV cycle. So it looks very exciting, and the current CEO is completely on top of it. So it's they're not able to produce enough to meet the market demand. This is what the market looks for. 25, 30, 40% growth, at least in next 4-5 quarters. So that's what I think. There is a growth bonanza here, and I think market will remain. I would think at 18-19 P multiple. I think it looks a good stock, good story to pursue for next 2-3 years.
Okay, all right. Ramdev believes it's a good story to pursue for the next 2 to 3 years. Deepak, what's your view? One of the big outperformers this year, out of nowhere, that rally which started from around 800 rupees all the way to around 1300 rupees. At 1300, what's the view?
Sorry, which stock was this?
Mahindra and Mahindra.
Mahindra. Although we own it, so very happy about it. But two things in the middle that came in. I think the scale here came from their releases, and the launches actually kind of were heavily booked. We're seeing a lot more demand in the space that Mahindra is very popular in, which is the SUV / entry level to mid level SUV spaces. We're also seeing, in general, the other parts of the business, which is either the agricultural machinery, the industrial machinery, and their ownership in a bunch of other companies as well, starting to do well on the back of the market. So I think certain valuation metrics around holding companies have also changed in general in the market. So that's probably added to it. We own it, very positive about it longer term, maybe slightly, reasonably valued right now. I don't know if there's that much opportunity in the short term, but I think long term, this is going to be a significantly larger company, perhaps because of its holding in other companies more than the core M&M business itself, and from perhaps electric initiatives coming forward.
Absolutely, Mahindra. I think it still would be one of the cheapest large auto OEM name. Used to be, late high single digits to about 10-11 times before the move started. I'm not sure where it is now based on forward multiples, etc. But Fed, would be at the lower end as compared to others in that space. Just a quick word, Deepak, if you will, on Fortis. This is, the management was with us, I think, on the 13th of September, which is early last week, said that IHH open offer decision should be out anytime now. Basically, and the speculation is rife that the judgment has been reserved for over a year. And this will set the ball rolling on that open offer and further integration, etc. Any thoughts here? Do you own it? Or is it one of those names like the restaurant company that you would like to own?
No, it isn't actually, because of this whole open offer and the court case and all of that business. So once this is over, there will still be a process of discovery after then open offer about anything else that might have gone wrong inside of the business that will come out to us. Typically after, so I think here we'll end up with a bunch of factors that we aren't aware of right now, and therefore, while I like the hospital space in general, I find it's a little richly valued for me, despite COVID, and I think COVID is a negative factor, because the kind of economics you got in COVID, you will not get in the coming years going forward. They'll have to cut prices for one, and you will not get the same kind of push up, at least in part of the hospital business. So I think I'll wait here for everything to evolve. And plus the open offer, they've been telling us for so much time that it's going to happen. And so I think in this case, let's just wait for it to actually happen before we take a call on this.
By the way, the stock of the moment is Dish TV. Just pull out the stock. It's hit circuit, upper circuit that is. Jawahar Goyal has actually resigned from the board of directors. I think this is massive news for Dish TV shareholders. This is official BSC intimation that Mr. Jawahar Goyal. Remember, there was this dispute between the shareholders and Jawahar Goyal in terms of relinquishing the control of the company, and now I think there is news that Jawahar Goyal is resigning. So I think that obviously is something, because in the entire group, previously you had seen with SL Propack as well, and the market wanted the family to go out, and after that you saw that stock do well. There's Dish TV. Jawahar Goyal has resigned from the board, and that stock is up about 10%. Deepak, have you tracked it? What's your view here?
Yeah, I think Z and Dish, Anuj, we don't own them, but the problem really is the promoter. In Z at least there was a transition to Sony. In Dish, there was other issues that were happening. The company is not very profitable. In fact, it just earns pockets and pockets of profit, and then has a bunch of exceptional losses in it. The accounts have, glaring irregularities that we had seen in the past. We were not very happy with them in the past. And in general, I don't find the DTH business quite as exciting as perhaps I used to because of the advent of more internet-driven last mile delivery compared to DTH. But having said that, I haven't seen any opportunity here. The promoter relinquishing position is probably a good thing for the company, but it's more a relief than anything else because the core fundamental questions are still unanswered about how this company is going to get to turn to reasonable profitability.
All right. For now, the stocks on upper circuit. Deepak, stay on. We have more questions for you. We'll take a break. Up next, we have a couple of stocks in focus: Bajaj Finance and Schaeffler India. On the back of a couple of brokerage notes, Schaeffler down 5%, Bajaj Finance up 3%. More on that on the other side of the break, and we'll have our chat with Ravi Dharamshi as well, CIO at ValueQuest Investment Advisor. All that lined up.
100 points just kind of plastered and stuck on the tape. That's been how it is. And this is how things were before we got into that bout of volatility last Thursday, Friday. 100, 125 points higher day after day. Are we getting back to that kind of a place once again for the market? We'll see. But today's flow number, etc., should be important. And a bit from now, a little later, we'll have Nimish kind of highlighting what he's picking up on flows, etc. So that should be interesting. For now, let's focus on another name which has been sort of doing very well, Bajaj Finance. It's up, 3% or so. There is a Jefferies note on Bajaj Finance. Abhishek is standing by to tell us what they're saying. Abhishek, over to you.
Well, it's an interesting note coming in from Jefferies on Bajaj Finance. They have a hold recommendation over there, but they have increased the target price to 8,000 per share from earlier target price of 7,300 per share. The interesting part that they say is that they have mentioned that Bajaj Finance has a shot at being the first NBFC to launch a credit card if at all RBI approves. So this would enable, Bajaj Finance to take the product, that is credit card, into deeper geographies as against the top 100 towns where it sells RBL Bank or DBS Bank's credit card. So Bajaj Finance has a huge network of around 3,500 plus branches, reaching about 140,000 merchants as well as 6 crore customers that they have. So if it achieves a 20% to 40% in terms of cross-sell to their non-delinquent, that is not NPA customer, which is a base of about 4 crores, this would would mean around 900 to 1700 crore of profit in the next 3 years. So this is about 5 to 10% of FY25 profit that Jefferies has estimate and would add as a growth driver. So they have raised the earning estimate, and they believe that Bajaj Finance can have a CAGR in terms of profitability of around 28% between FY23 to 25. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Deepak, what's your view on this one? One of those big outperformers, buy on dips kind of. Valuation is always expensive, but what do you make of it from here on?
No, it's a lovely stock. We just calculated it. I think it's done 100x in the last 10 years, roughly 99.9x or something like that in the last 10 years. So it's a little, it's an amazing stock. It's the only thing that was going to stop it was overall drop in credit growth. I think credit growth is really good. We haven't invested largely because the valuation scares us. But in general, if they continue to have earnings growth at these kind of levels, 25-30% plus, I think it might still be a reasonable candidate for a 5 to 8 year period, even though the initial current volatility might take it down in the short term. It's still, much below its all-time high made earlier this year. So it's not showing any signs of momentum, but I think it's a good stock to own. We've just probably missed the bus. We'll probably get back in at another point, but it definitely does look attractive.
Okay. Well, just look at India Cement, by the way. It's in ban now, so obviously you can't create fresh positions in futures market, but 6% higher on that one right now. So big move happening here. The other one is in focus is Schaeffler. We don't normally talk about this stock, but Kotak has downgraded its rating to sell. Rima is here with more details. Rima?
Thanks so much for that. So Kotak has downgraded Schaeffler India to a sell from an ad rating target price at 2,600 rupees, a significant downside from where the stock currently is. The reason is they believe that the medium-term opportunities are priced in. Valuations at 52 times forward multiple is expensive. And while the export story for Schaeffler India looks very promising and optimistic, they're not convinced about the domestic business. So they're saying that the current price, the current valuation is pricing in a 19% revenue growth for the domestic business for the next 15 years. Well, the company has not seen such kind of revenue growth for the last decade, and they're saying that considering that 75% of its revenues comes in from the automotive market, the replacement OEMs, which are only expected to see a 7 to 8% revenue growth over the medium term, where will this 19% domestic revenue growth that the street seems to be pricing in come from? They find that very challenging, and that's the reason why they've downgraded it today. Back to you.
Okay, all right. Thanks a lot for that, Reba. Well, Deepak, you got the broad sense out there. Schaeffler, one of those, companies in the bearing space that got premium valuations. Now, Kotak believes that they've run a little bit ahead of themselves. What's your view on the bearing space? And nowadays, there are other interesting themes, to play it via. Maybe Rolex rings that produces some kind of component of that bearing, or, the new listing that we are likely to see, which closed a couple of days ago. Big interest being seen out there as well. Your view on the space?
So yeah, I think we own it. So, a positive on the company, that's Schaeffler. The stock itself, the company itself, of course, it's gone up quite tremendously in valuation. I think it's gone from 2,000 to 3,500 in a very, very short time. It went in less than 2 months or something. So I think some correction is kind of par for the course, but is a good company in the bearing space, will benefit from an automotive recovery, has a reasonable space in the automotive aftermarket, and we're seeing revival in auto in general that's happening. And I think Schaeffler will be a beneficiary. I would say, the valuations primarily come from the relatively low float because most of the company tends to be held in either institutional or parent hands. And therefore, you get a much higher P than you would otherwise pay. Just in comparison, our conversation with Bajaj Finance, I feel more comfortable holding a Schaeffler than a Bajaj Finance. Though growth opportunities may be slightly different, I still think, this is a great company to hold longer term. Shorter term, expect, a 75% move will always have some kind of a downside in the short term for sure. So you have to deal with the volatility.
All right, Deepak, thanks a lot for joining us. Good talking to you as always. Let's move on then. The market is still holding firm at about 100 points higher on the Nifty. Ravi Dharmshri is CIO at ValueQuest Investment Advisors. He is now joining us. Ravi, hi, good afternoon. Thanks a lot for joining us. What explains this massive resilience that our market has shown? I mean, so much has been thrown at it, dollar index, bond yields, the big weakness in the US market. Nothing seems to bother.
Yeah, thanks Anuj for having me on the show. I would just say that during the time when the world was enjoying the growth, we were actually going through a lot of pain. If you roll back to 2017-18, when US was going through fantastic growth phase, we were struggling with our domestic issues like GST, demonetization, IL&FS crisis, one after the other things, which actually destabilized the economy in the short run. Now those things are actually acting in favor of the economy with the consistent GST collections that we are seeing above 1.4 lakh crores. Tells you that the engine is finally cranking up. Our economy is actually doing well. So when in a scenario when the world is actually slowing down due to geopolitics, due to inflation, due to interest rates going up, and the commodity prices also, India is actually in a position to take that blow in a better position, in a better way than most of the world, developed world is. So when COVID hit, most of the world actually went and printed money left, right, and center. Well, for various reasons, good or bad, we actually did not do that. So not too much of demand stimulus was provided. We actually focused on only giving a protection to the lowest at the bottom of the pyramid. So that is what is actually holding us in good stead, where we are not having a runaway inflation. And we had more than, kind of 10, 11 months of buffer in terms of forex reserves with RBI in terms of imports. Now that has come down to close to 9 months, but I think we still have decent enough cover. So our rupee has been stable, inflation has not been runaway, and we could actually provide counter-cyclical measures in terms of cutting excise on the fuel when the fuel actually went up. So all those things have kind of helped us in managing our balance sheet, and the domestic cycle is improving on many fronts, from manufacturing to real estate to financials. Finally, the credit growth is coming back. So multiple factors, and we are actually positioned in a counter-cyclical way to the world. That is why, despite the fact that we had $35 billion of outflow from April 21 to June of 22, we have shown this kind of resilience because the money has also flown from the domestic money has flown in.
Ravi, hi, good afternoon. Would you be at the margin a net buyer of stocks or a net seller of stocks? I mean, booking profits as well. I mean, I think that would also figure, right? If you got in early, made a lot of money at the net level, what are you doing?
So, Prashant, we have been net buyers. We are not net sellers. However, at the same time, there is a lot of churn in terms of what kind of in our portfolio composition has undergone kind of a shift. When COVID struck, at that point of time, we were actually very bullish on themes like pharma, chemicals, IT platform, capital market related companies. Those kind of companies have actually, so what we realized later on is that there was a lot of one-time component to the growth that they saw. And they saw not only top line growth, but margin expansion as well. And then those inflated profits were getting higher multiples. So what we did is actually scale down on the exposure over there. And we added a lot of domestic cyclical exposure. So financials, real estate, manufacturing. And manufacturing encompasses a broad range. I'm talking from auto components to defense to capital goods, engineering. Everything comes under that thing. So that way the portfolio composition has changed. But net we have been buyers in the market.
Yeah, all right. Hi, Mr. Dharamshi. Good speaking to you. The last time we chatted, when we spoke about the real estate space, you were talking about home first finance. Stock has done pretty well. I mean, it's a little higher from when we spoke last. But talking about being bullish on the real estate theme, what about cement? Stocks, the way they are flying, they expect the new entrant to come and buy most of those companies. Have you all played that theme, particularly with regard to those mid-cap companies out there trading at valuations that are far lower than replacement cost?
So Nigel, I'll have to admit over here, we don't have any exposure to cement, and it seems like it's a mistake, but honestly, it's more because our mind is not prepared. So, but from whatever I have seen, it's essentially an entry of a new player that is going to lead a consolidation in the sector. And once that happens, if the consolidation gathers pace, then clearly the pricing power will come back. One thing that we have seen is that the overall utilization levels in the cement X of South. See, South has always been on the lower side in terms of utilization, but X of South, the utilizations are touching almost 80%. And whenever that happens, some amount of pricing power comes back and new capex is announced in the cement. So cement seems to be in a favorable cycle. And of course, on top of that, all the infrastructure spend that the central government as well as the state government is going to do will give a boost to the demand. And right now, monsoon season is going on. Once that is over and the festive season kicks in, some amount of demand will again come back into the system, and that should be the real, first sign that the demand is actually holding up, and in fact is way better. So we don't have any exposure to cement, but I have a kind of a positive bias towards it.
Okay, positive bias. Well, just look at ICICI Bank, by the way, because it's the leadership stock, and it's at the low point of the day. Second day running that, it's almost there at the closing hour. Sometimes you just want to give importance to these anecdotes, but that's drag the market slightly lower once again. So just keep an eye on this. Ravi, in the banking pack, clearly there's been such a massive leadership change. What kind of stocks would you buy at current levels, if any?
So the thesis remains quite clear in financials. You want to go with people who, the banks where balance sheet cleanup is behind you, management uncertainty is behind you. There is no overhang in terms of a stake sale or anything. The current ROEs, ROCs are reflect like more like 10-12% range, and there is a scope for leveraging the balance sheet. So if you can see a clear path of ROEs going from 10-12% to 15-18% over the next 2-3 years with a 15 to 18% kind of a growth in top line, I think those are the banks that you want to be associated with. Without naming any, I think one of the larger names, the story is very clear. Again, just like India, this particular bank also saw cleanup much ahead of the rest of the banks, and hence it is actually seeing, kind of the leadership has changed. And some of the old leaders are actually facing issues because of the management change, merger, which is not actually giving a clear picture as to how it is going to pan out over the next from next 12 months point of view. Beyond that, even those banks might be a good play.
Were you referring to IndusInd Bank by any chance, Ravi?
I will not name anything.
Okay.
Okay. Will you name anything in defense as a space, Ravi? I mean, you like that space, and stocks are up this year alone. They're up 100-150% in some cases.
Yeah, Prashant. So I'm very, very bullish on defense space. And see, this is a completely new space. There is not much coverage. This is exactly like how chemicals was in 2014-15, when people didn't know that a sector called chemical existed. There is not much brokerage coverage. Of course, in the last few months, some brokerage coverage has come back. See, India is at the cusp of a manufacturing renaissance. And within that, defense is actually taking a lead role. So defense and renewables are two spaces where there is going to be almost a hockey stick kind of a growth over the next few years. And the order books are built for that. So the problem in this sector was that it was lumpy in nature, because finally it is, for all practical purposes, your customer is government. Okay, whether it might be various government agencies, but it's a B2G business. So that was the problem. And second problem was that the payment always used to be delayed. Now the payment cycle has improved dramatically, and government has provided a lot of visibility in terms of next 3-4 years business. So the lumpiness is gone. And apart from focusing on Make in India and Atmanirbharta push, there is also, they have actually this list that they have come out with, where they have banned some 400 odd items from import. That is like a real kicker. So now there is no choice but for whether it is Army or Navy or Air Force to actually procure these things locally itself. So this is a big push. there might be a delay of a year or so, but for sure, domestic defense manufacturing is going to pick up in a big way. The last year exports that we saw of about 13,000-14,000 crores is also a big number. We have not had that kind of export. So it was not only a domestic demand, but it is also some amount of export. And the size of the companies over here will change multi-fold over the next few years. So no doubt that the stocks have run up, but please, I mean, it's a wait for an entry point, but it's some sector that requires an exposure from the next 3, 4, 5 years point of view. One should have exposure to it.
Okay, all right. Mr. Dharamshi, before we let you go, with defense is a little bit more tricky, because if I try to zero down on what you're buying, some of those missiles and all the names are quite complicated. So let's not get into that. But the broad sense that we get is you're bullish on the theme. Final question, pharma, you said you'll pull back some bit of the exposure. You're playing more on the domestic theme, and you've said that you've maintained that consistency over the last few times we caught up as well. What about IT? Still more pain out there? Any exposure?
Yeah. Nigel, I'll just address your defense part a little bit before I go to the IT part.
Please, go ahead.
On the defense side, actually, the way we think about it is, so that at headline numbers, it is not actually visible, Of course, there is a allocation increase, but most of the allocation is actually going towards paying salaries and pension. But if you drill down, remove the revenue capex, items, and focus only on the capex items, then you will see that actually the play has to be Navy and Air Force. These are the two arms, of the government that are going to spend a lot of money. And the companies over here are very, very small in comparison to the opportunity. So without, again, naming any companies, I would say focus on companies, those are addressing these two particular opportunities, Navy and Air Force. And again, offset partners are something that is going to become a big theme over the next few months, as a lot of these companies, just like we saw in this PLI in the electronic space, where the companies changed league in a span of 3-4 years because of the mobile and AC manufacturing and all. Similar thing is going to happen in the Indian offset space also. These small companies with 500,000, 1,500 crore kind of turnover are going to end up becoming 5-10,000 crore kind of turnover in a very, very short period of time. So that's on the defense. Coming to your question on IT, I think, again, we missed the IT rally from IT services rally in 20 and 21. But at the same time, we have still stayed away from IT purely because we believe there was a lot of room for margin. Margin expanded a lot because of travel costs being low, because of the pricing being favorable. Now those things are not there. The pricing has become unfavorable, as in the prices are eroding. Travel costs have come back, and there is a lot of attrition. So there is a good amount of pressure on the margin, and the demand, of course, is growing, but it is not growing at the kind of bunched up demand that we saw because of COVID and digitization. So I think there are some challenging quarters ahead for IT. Maybe 2 to 4 quarters is what I would say. But again, this remains an all-time green space, and we would be looking to, always have a kind of a play at some point in future.
All right.
Just one thing, Ravi. Sorry, just on defense. Just to go back to defense, do you think from here there is a lot more, because it's the trick always is to kind of figure out how much is in the price, right? Some of this growth that you were talking about, or you think? Yeah. Sorry. Go on briefly.
No. Absolutely. I think these companies are going to change orbit in a big way. See, when we started tracking, just to give you an analogy of another sector that will put things in perspective, chemical stocks were trading at multiples of 8, 10, and the growth that they were showing was 12, 15% kind, and the margins and the ROCs that they were making were decent in terms of 15, 16%. But what happened over the next 5 years is that the growth shot up to 25, 30%. The margins expanded from to almost 20, 25%, and the ROCs expanded to 35, 40%, and the multiples consequently went from single digit to now 35, 40, easily sustainable. So that is the kind of re-rating we saw in that sector. So when a large opportunity meets a small sector, and when I say small, it's the size of the companies in absolute terms are very, very small. All of these companies are still at, and I am barring the few large PSUs I am talking about, the companies are still in 1,000, 1,500 crore or sub 1,000 crore kind of turnover. these companies will change scale in a big way over the next 5, 7, 10 years. So there will be margin expansion, there will be re-rating happening. In fact, still some of the large PSUs are still quoting at sub 15 P multiple. So you have to kind of keep that anchor bias aside and focus at it from the next 3 to 5 years point of view. You might be paying upfront for a year's growth, but I don't think the story is over yet.
Okay, we'll leave it there today. Ravi, thanks a lot for joining us. Good talking to you as always. While that conversation was going on, the Bank Nifty just took off. And just look at how it happened. State Bank of India, really remarkable. The strength in State Bank of India and Axis Bank as well. I was talking about Axis in the morning as well as one of the stocks where you've seen some gains, and State Bank of India really has been the best performing stock. We'll take a break. We'll come back, and as always, we'll get you a check on what dealing rooms are saying with D Street Chatter. Nimesh is there, and of course, our technical experts will be back for the BTST calls. Welcome back. Like I was pointing out, in the last 10 minutes, we've seen a decent enough surge in the Bank Nifty, which was in the red and has now moved 200 points higher. And a couple of other stocks which stand out apart from the Bank Nifty. One is Nuvoco, again from the cement pack. It's up 10% now. And Mazgaon Dock is the other one, which is seeing a very sharp move, 7% higher on Mazgaon Dock. So a lot of these individual names moving around in trade. Time for D Street Chatter. Nimesh, of course, is going to tell us what's happening in the dealing rooms. He's there at the Motilal Oswal conference, so I guess today he may not have, needed his phone. Must have got all the information there itself. Nimesh, tell us what you picked up.
It's good to be back on the floor, attending a conference, meeting a lot of fund managers. So the initial feedback from a conference point of view, one, the corporate commentary is very strong, and B, most of the fund managers do expect the earnings are going to be quite resilient. So that's the initial feedback of some fund managers whom I've spoken to. Now, from a markets point of view, the feedback is very clear. It's going to be a volatile week ahead of the FMC meet, so that's going to be very crucial for the Indian markets. In terms of flows, a bit muted in today's trade because not only from the FIs, even the domestic activity is quite low. And one of the reasons could be most of the fund managers seems to be quite busy attending multiple conferences. So that's the overall feedback. While within the sectors, I guess the one sector which is really well bid, and that's where the leadership seems to be, is the financials. Every day, the feedback is the banks are well bid, and that's the case today as well. A bit of churn within sectors as well. So metals is seeing some bit of profit booking, but today for a change, there's a bit of interest back in the FMCG sector. So that's playing up a bit of a catch-up game. In terms of technical levels, I guess still the Nifty is in the range between 17,200 and 17,800. So that's going to be the range for this week. But as I said earlier as well, the Fed meet and the outcome will be very crucial for the Indian markets, at least in the short term.
Okay, all right, Nimesh, what about individual stocks? What are you picking up?
So Nigel, in terms of individual names, the first stock is Advanced Enzymes. There was a large block deal of 2.5% equity changing hands. The feedback that I'm getting is most likely the promoter entity is a seller in today's block deal. So the disclosures will be quite interesting to watch out for today evening. So that's the first one. The second stock is PNB Housing. That stock is up in trade. Up last when I checked, it was up 8% on good volumes. I guess the street is now looking forward to a concrete roadmap in terms of fundraising for PNB Housing. So that's going to be a key trigger. And maybe that's the reason why the street is a bit excited on PNB Housing today. So that's the second one. And the last stock is Jain Irrigation. Again, a small stock, but buzzing in trade, up 5% last when I checked on good volumes. And the buzz is that maybe the company is going to bag a very large order very soon. So that's keeping Jain Irrigation exciting in today's trade.
Okay, Nimesh, thanks a lot for that. By the way, since you referred to PNB Housing, I just looked at Canpin Homes once again. 8% down now on Canpin Homes and counting. So this is some serious cut that you're seeing on that name. Just pull out that chart. 8% gone, 585 on Canpin Homes, and pretty large volumes as well. As I was saying, there are a lot of buzz around the stock, but market price action today has been quite eerie. Mitesh is back with us for BTST calls. Mitesh, go ahead.
Cement is a buzzing sector. India Cement is closing on fresh highs. Good chance we'll see momentum. I think it's hit circuit up just now. But in case you have it, in case you want to buy it, if you get it, keep a stop below 288.5. Look for targets of 300. And MCX is something which is on the negative side. So I think that is the STBT with a stop at about 1231 for targets of 1205.
Okay, all right. Mitesh, thanks a lot for that. Well, let's focus on the cement space first up. Ambuja Cements, we already have the basic details out here. Promoter entity is issuing, getting warrants. The total dilution is quite large. They have taken shares, at a price of around 419 rupees or thereabouts. And the total infusion will be close to 20,000 crores on conversion of those warrants. The promoter holding goes up to around 70%. We all have all of that. The big statement came in from Mr. Gautam Adani. He says he wants to be the most efficient and the largest cement company by 2030. Ultratech Cement, well, they're the big boy in there. They could see that as a bit of a risk. Maybe that's what the street thinks at least. Though they will have a capacity of close to 155 million tons by 2025. There's hopes of consolidation out there, clearly in this space. And that's why you're seeing some of these stocks that, are moving up in trade today. But let's focus on three big names and some of those stocks that are buzzing around in trade. Now, say, in fact, they have to spend this entire 20,000 crore rupees odd. At $80 per ton, they can back close to around 31 million tons. And if they go for an acquisition, the street sense that there is going to be some inorganic growth. It will be $120 per ton. The street is reading this, that inorganic is going to be crucial because they want to double their capacity. So let's focus on three of them. Novoco, current capacity is around 24 million tons. Or they get a large chunk if in case that's part of the consolidation, if in case. Currently, they have exposure to East as well as North India. The IPO, remember, was in August 2021. The IPO price around 570. The stock became half, and now, in fact, it's running away yet again on hopes of consolidation. India Cements, valuation-wise, it's nearly around $95 per ton odd. South-focused company. Two large entities in there. One is the promoter entity with around 28%, and Mr. R.K. Damani, who has another 21% odd. So interesting to see whether or not that's part of this consolidation. And finally, Sanghi Industries. Gujarat-based company, valuations, have been cheap, have always been cheap, trading at around $65 per ton, capacity of around 6 million tons. The question is that they have a debt of around 1,300 crores. Can they service it? That could be one of the factors that could make them part of this consolidation drive, if at all. And the promoter entity, though they have capacity of 6 million tons, they're not even selling 3 million tons out there. Shareholding, promoter has 70%, but nearly 100% of that is pledged, though they bought close to 1.5% stake from the open market in August 2022. So let's see how things play out. For the timing, the street believes there is going to be consolidation, and Adani has raised this money to pull in a couple of names. So time will tell. For the time being, let's pull up Kunj Bansal. Hi, Kunj. You heard that small piece that I put out. What's your view on the cement space? Missed the buzz, or do you think there are still a couple of stocks in there which are giving you some bit of potential to invest? Go ahead.
Yeah, so of course, partly the buzz has been missed, and it always happens that when market is down, like including the last week on Friday, generally a fear sets in and the market participants tend to move away. And they come back, which is okay also. Every price move gives you confidence on the higher side. So that's quite okay. But I don't think the bus has been fully missed. We still have a way to go in the cement industry. So any participation by way of buying either the existing bigger players, let's say namely even Shree Cement for that matter, although the valuation has always remained on the higher side, but given the way efficiently the company manages its operations and slow and steady growth that company has been having in its capacity and is planned further, could be a way to get into this, take exposure to cement industry. Or the other could be what exactly you were talking of, that with the entry of Adani Group in the industry, there is likelihood of, in fact, if we look at the history of the cement industry, there is a consolidation has always been theme. So Ultratech was the one which went on buying a lot of cement companies from Anil Ambani Group, from JP Group, continuously over the period of last few years. And similarly, there have been some deals. So that will be the way forward with the entry of another big group, that is Adani Group, coming in. Consolidation will continue to be a theme. So I don't think bus has been fully missed out, and there is a opportunity to make returns for investors even now, leaving aside market volatility.
Okay, Kunj, stay with us. We have to take a quick break here, but be right back with you in a minute. So stay with us. 100 points in the Nifty still there.
Welcome back. Just about a couple of minutes left for markets to close. So let's do a quick recap of how things turned out. Once again, after that initial volatility right at 9:15, the market just bounced back and then didn't look back. 110 points higher on the Nifty. The Bank Nifty up 200 points, so the advanced decline was in favor of the declines. In terms of individual names, Mahindra was your top Nifty gainer, up 3.5. Bajaj Finance, Adani Ports, SBI Life, Lever, SBI, HDFC, ITC, Eicher Motors. These were a few other names which did well. On the losing side, you had Tata Steel and Tata Motors both down almost 2%, and ICICI Bank, which was down about 1%. Prashant, what about the broader market?
So more declines than advances today. 1,215 stocks lower and about 1,000, just under 1,000 stocks which were higher. So let me just take a quick look at what was down first with volumes. Delta Corp was down 4.5%. Canfin Homes was down 8%. Karur Vysya Bank was down 6%. GNFC down 5%. Aptus Home was down 5.5%. DB Corp lost about 7%, and there was Gati, which was down about 5% as well. So these are the large volume-led losers that we had today. Nigel.
Well, that's right. You know, the start of trade, you were wondering whether or not we're going to have another down day, but at least the headline index still put back. Though the number of stocks that were declining were way more than the number of stocks that were advancing, and that gap kept widening. You know, towards the end of trade, you had close to around 1,600 stocks that were declining and just around 1,250 stocks that were advancing. The cement space, that's the space that really is seeing a lot of interest. Sanghi Industries locked in upper circuit with a gain of close to around 5% midway through the trading session. Novoco ran up. The street is clearly expecting something because of the size of the asset. You know, 23 million tons, or if in case there is a consolidation, then maybe, in fact, that could be one of the key stocks that will drive it. And also, you know, the other name is India Cements. You know, we have a promoter entity in there with 28% stake. You have a large shareholder, Mr. R.K. Damani, with around 21% stake. The street believes something's got to give out there. Let's see whether or not something comes out of that. For the time being, we'll, just to wrap things up, the Nifty ended with a gain of more than 100 points. The mid-cap index, as proud as can be, the Nifty Bank up close to around 200 points. We'll wrap up on this edition of Closing Bell, but don't go anywhere. Our Monday special, Money, 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 comes up next.